Welcome to TheoTrade. This is Don Kaufman. You are watching the Theo Night video. It is May 25th, 2016. The S&Ps continue their climb to the upside over here. Fairly astounding. We are all the way back at 2088 inside of the S&P futures, just a stone's throw off some of the all-time highs. In fact, to look at some of the all-time highs, why we look at the S&P futures when you can look at the SPX itself? And again, I want to put this into a little bit of perspective. And the reason I'm just going to spend a moment and do this is it was just the other day we had the 1-year anniversary of the all-time high inside of the SPX. And the SPX, the all-time high, 2134. And again, you got to put it in perspective where we are right now. We're 2090. Stay a stone's throw. I mean, like 40 points. That's been the last 2 days of trade inside of the S&Ps over here. But again, to zoom in on this move, a fairly astounding move to the upside, 2100 has got to be in the back of your mind. Not to mention, well, we're coming into a holiday weekend. Everybody's kind of thinking, well, trade's going to be a little bit boring. Once again, I remind you, there's a lot of Fed speakers. The week is actually closing out with GDP and Janet Yellen. That's going to be on Friday. But more appropriately tonight, I have been setting up a couple of trades, and that's what I'm going to spend the time talking about, rather than looking about, hey, the S&P's rallied over here. Thank you, Captain Obvious. I want to get into some trade ideas, because that is what we are all about here at TheoTrade. First and foremost, I'm going to take us over to the XLE. And for those of you that are unfamiliar with the XLE, it's the energy sector. So the energy sector, and I decided to start with like a 3-year daily, and I'm just going to close up the left side bar. Again, looking back, all-time highs here, 101, fades, quite considerably here. And again, this is one, just to put it into perspective, even putting like a 10-year monthly out there, oof, I mean, wild moves, obviously. So the reason I'm trying to put this in a little bit of perspective, what do you feel about the energy sector right now, having come back such an astounding amount? And once in a while, going out to even like a 10-year monthly can help you put a little bit more perspective on here of how substantial this move has been. Nevertheless, we've seen moves like this to the upside in the past in the energy sector. So to give you what my current position is, I am shorting into XLE right now. Okay, so it is a contrarian trade based on the fact that we've rallied roughly from the 50 level. And again, just to provide you a little background, I was long energy, okay, back into late January, early February of this year. I was actually long via selling puts. Now I'm looking at flipping that position over. I am already in a position in the XLE, and I've currently began shorting. So currently I'm short 600 shares. And yes, I am shorting the outright shares of the XLE, which is not right for everybody, because number one, you can't do it in an IRA, and number two, not everybody has the capital just to go out there and start oh, he's going to sell some shares, and I'm going to sustain that position for a period of time. Nevertheless, I'm short, again, because of the magnitude of the move that we've seen from, again, roughly the 50 level all the way up to where we're currently trading, 67, 68 handle. Again, on a percentage basis, it's nothing less than astounding to see the rebound. So my thinking, maybe we come off a little bit. All right, I like the risk reward of this, and that happens to be, well, what's my risk? Well, energy continues to explode to the upside. What's the reward? Well, being short. This thing could come off $4 or $5 easily, all right, if it's an overcooked chicken, and that's what it kind of appears to be. Now, if you're not so inclined, you're not comfortable per se with XLE, or you just can't short shares out there, might want to look into individual equity products. Okay, and I'm not saying you have to go out necessarily and short the equity products. So I decided to look around and see what really comprises and what is the XLE based on. And that happens to be ExxonMobil, the ConocoPhillips of the world, everything that's big in energy. Okay, so one of the first underlyings that pulled up was ExxonMobil, and talking about astounding rally. This is a product that ExxonMobil that took off to the upside and has never really looked back. Again, on a percentage basis, quite phenomenal. Okay, I also look, at a few other underlyings. Again, same sector. So it's important to not just identify one underlying, like I'm going to trade the XLE, and identify a multitude. And I looked at the percentage recovery in here, and all right, so it's also, but the chart pattern is a little less straightforward in here. So having looked through a number of different underlyings and considering liquidity, okay, I liked the ExxonMobil trade for a more contrarian play, and that is we're actually going to set up a spread in ExxonMobil. ExxonMobil is only going to have to back off a few dollars to make our spread profitable. So I always go back to what I call the well. And what going back to the well means for me is some type of an in-out spread. So we're trading right around 90.26, and again 90 and change over here. And I'll look to set up about a $2 wide spread. And in this case, again, if you're curious about liquidity and so forth, you can open up volume and open interest, and there's not going to be a tremendous amount of volume and or open interest yet in the 37-day options. And the reason that the open interest isn't there, these options are newly listed. They haven't had enough time to accrue the open interest. Okay, so if you look at the short duration though, like the 2-day weeklies, there's plenty of open interest in there, which means these options, the closer we come to expiration, they're going to pick up liquidity. And I start picking it up and picking it up. So where you have to be price conscientious is getting in. Getting out, ironically, is going to be easier. So if you're getting out of a trade, it's going to have a lot more liquidity. The bid-offer spreads are going to be tighter. If you're worried about, hey, on the way in, the bid-offer spreads look a little wide, you have to be very stringent about your execution. And that's one of the things that I do every day in the chat room is if I'm going to place a trade, I probe the market, with my capital, and I figure out where the best execution price is. And I will be executing this trade in the chat room come the morning. And again, we're just going to use an in-out spread. And when you use an in-out spread, I'm going to be buying the 91s in here. And again, I'm going to be buying the 91s, for instance, selling the 89s. It's a $2 wide spread for about a 90-cent debit. Now, don't succumb that this is the only spread you can use, because what if ExxonMobil opens up 50 cents tomorrow? Okay, well, then you can maybe go to the 91.50, all right, 89.50, and it's trading for about $1. So this is, again, it's a risk a dollar to make a dollar kind of scenario, and we're never going to make the full dollar. All you're trying to do, okay, is go out there, buy a spread for right around $1, and you're going to make anywhere from about 55 to about 65, okay, % on that dollar. So that means I'm trying to make like 55, 60, maybe 65 cents on this thing. And the probability of hitting, okay, or making, I should say, that 55% is drastically higher than the probability of losing $1 in the spread. So it's the probability of hitting your profitability target. It's not the probability, okay, of going to 89.50 in this case. It's the probability, all right, of you making your 55% that we're so concerned with, and that probability is drastically higher than losing the full dollar. Hence why we use these in-out spreads so often here at TheoTrade. So again, join us each and every day in the TheoTrade chat room, and if you cannot join us live in the chat room, we are now emailing out the trade ideas. So after I go out, I probe markets, get a pretty good feel. We'll go ahead and actually email out a trade. And this will be, on the docket for tomorrow. ExxonMobil looks like a decent setup and a candidate for the next 37 days to fade. And fade means sell off just a little bit. Thanks a lot, everybody, for joining us here at TheoTrade. My name is Don Kaufman. I will be back on all of this week in the TheoTrade chat room, of course, and on the weekend update. Thanks, everybody. Have a good evening. Bye-bye.